Right, good evening everybody. You know, I thought we were going to start off the stream downtown in Lower Manhattan, which we down there anyway for a meeting, but for some reason I came all the way back up here. I don't know why. But tonight on the stream we are going to head downtown to the Brooklyn Bridge, and on our way we are going to stop by Wall Street, so we're going to be able to see the one and only fearless girl for our pal Ruby Falcone. Fearless girl, we'll walk over to Broadway, check out the mighty ball. Pretty relaxed stream tonight. We're not going to cover too much. Not going to cover too much today, mainly because I don't have the microphone. But anyway, so the U.S. Producer Price Index came out today, and it was a face ripper. Nonetheless, up 10.8%. The majority of that increase was due to energy. So the cost of energy is in an exponential rise. So if we look, that actually did moderate a little bit, which is actually some pretty good news. Secondly, as the stream progresses, the second thing we will talk about is the Federal Reserve Day tomorrow. So there's a lot of talk on Wall Street, interest rates, 50 basis points, or 75 basis points, or 100 basis points. So we're going to talk about our friend Bill Ackman. So Bill Ackman is a very notable hedge fund manager on Wall Street. And he's actually coming out, and he came out with a series of tweets today, which I thought were rather interesting. So let's read one of Bill Ackman's tweets today. He says, the Federal Reserve has allowed inflation to get out of control. Equity and credit markets have therefore lost confidence in the Fed. Market confidence can be restored if the Federal Reserve takes aggressive action with 75 basis point hike tomorrow and in July, and a commitment. He then follows up to add to his tweet by saying, you know what, in addition to that, I hope for 100 basis point rate hike tomorrow, and in July thereafter would be better. The sooner the Federal Reserve can get to the terminal FF rate, which is the federal funds rate, and therefore can begin to ease, the sooner the markets can recover. So essentially, Bill Ackman just really wants to do a quick rip the Band-Aid off and get it over with, which I think I agree. I doubt we will get a 100 basis point rate hike tomorrow. I think we're going to get the 75 basis point rate hike, but we'll talk about it. I want to know what you guys think. And lastly, big piece of data, not really economic. The yield on the 2-year, the yield on the 10-year is going parabolic, and the yield curve is flat. So in other news, the 30-year mortgage rate surges to 6.28%, up from 5.5% just a week ago. So the average rate on the popular 30-year fixed rate mortgage rose 10 basis points to 6.28% on Tuesday. The rate was about 5.5% a week ago. Rising rates have caused a sharp turnaround in the housing market. Home sales have fallen for 6 straight months, according to the National Association of Realtors. So we're going to talk about if we see a potential for a housing crash. I don't think so. We're going to talk about some markets in your neck of the woods. We're going to talk about how they're doing, and I'll give a prediction of the housing market where I think it's going. But that essentially wraps up the news for today. Let me go ahead and put my laptop away, and then we will check out who we have in the chat. So bear with me one second. Oh, everybody, I forgot. Please stand by. So a quick story, and then I'll say what's up to everybody in the chat. So I left the office today. I was walking down Park Avenue, right outside one of the newsstands, and I look down at the newsstand and I see the New York Post. So the New York Post almost never talks about the stock market, almost never. So check this out. Check this out, everybody. This is on the front page of the New York Post today. It says, "It's looking grisly," with the New York Stock Exchange in the background and a bear that's looking like it's gonna maul Uncle Sam right here. And it says, "Bear market has economy running scared." So why is that important? We're gonna talk about that. And the reason why I bought this is I usually collect all very notable headlines of newspapers. But there's a big significance in this one. Let me put it away and I'll tell you guys why. So I'm assuming everybody knows who Bernard Baruch is. One of the greatest investors of all time. There's actually a college in the University of New York system, the CUNY system, Baruch College, named after the gentleman. And he says something along the lines of one of his famous quotes is, "If you show me the charts, I'll tell you the news. If you show me the charts, I will show you the news." So what does that mean? Well, in relation to the New York Post, the reason why I find it so intriguing is because the only other time I have ever seen the New York Post, which is not a financial media outlet, right? This is what you call mainstream news. So Main Street reads the New York Post, the average guy every day just going to work. Very seldom do they talk about the financial markets. So anytime that they do bring up the financial markets, in my experience, a bottom in the market is extremely, extremely close. Like extremely close. Now, I'm not saying that the market is going to bottom because they were talking about the stock market meltdown in the New York Post. What I am saying is that the only other time that I've seen the New York Post on the front page of the Post talking about the stock market was on March 18th, I believe, of 2020. So if you guys want to go to my Twitter page, if you follow @WalksWallStreet, I save all of these headlines, by the way, because back in the day I was telling you guys I used to build market sentiment algorithms. It turned out to be a disaster, but that's besides the point. And I also think it's a pretty cool piece of history. But check out my Twitter handle, @WalksWallStreet, and notice the similarities between the cover story in the New York Post literally 2 days before the market bottomed and right now. Very interesting. But guys, enough crazy talk. Let's see who we have in the chat. We have WW. Good to see you, WW. Yeah, you were first. Mr. Ming is here. What's up, Tom? We have the one and only Santa Monica Rodriguez. Good afternoon. We have By the Book. Welcome, By the Book. Future Endeavor, Dante Rose. Charlie Richardson, what's going on? Michelle Henry, the ABX girl from the Bronx. Always a pleasure. Michelle K says hello and good evening, everybody. Good to see you, Michelle. Hopefully you had a good day. Samantha R. Hey, Marty Lewis is here. Long time no see. Marty, did you go swimming today by any chance? Just curious. I went swimming when I was in Miami for about 2 hours. It was actually pretty nice. Sherry Rodrigo is here. Says, hey, Tom. Simjib says, hey, Tom from Montreal. Good to see you, Simjib. Rob K says, time check 8:55. Thank you, Rob. Revis is here. Says, hello, Tom. Hope you're having a good evening. I am. I hope the same for you. Donald says, the view is beautiful to start this evening's walk. I have to agree with you, my friend. Sandra Nunez, Fred X says, hey Tom, good to see you. Miss Bash, Charlie Richardson says, gorgeous. Ruby Falcone, always a pleasure. Thank you for being a great moderator. And Ryan Royal is here, says, good evening, Tom, and the Empire State Building is looking great. Otto is here, says, hey Tom, Flat Smack and Mets fan. Says, hey Tom, I bought some SPY, ticker symbol SPY, which is the ticker symbol for the S&P 500, one of the ETFs. Yeah, so we'll talk about all that today. Marty Lewis says no swimming until next week. Oh, man. Marty Lewis has got COVID last week, but now I'm feeling better. Well, that's good. Please rest up. Please rest up. Your health is more important, obviously. NMB045 says, hey Tom, great view for the start. Appreciate that, NMB045. So I was working the majority of the day from Park Avenue, but then I had to go down to Rector Street for a meeting. And for some reason I came all the way back up here, which I shouldn't have. But then again, I did need to get changed, so I changed at the office. But we are right outside Madison Square Garden, overlooking the one and only Empire State Building. But tonight, everybody, we are going to be walking downtown towards the Fearless Girl and the Mighty Bull. I think it would be very fitting if we pay the Federal Reserve a visit. You know, maybe we could influence our friends at the Fed Chairman Jerome Powell to raise interest rates 75 basis points if we stream outside the building. You never know. One can hope. One can hope. Hey, Wendy England says, wow, the colors are looking crisp. You know, for the first time ever, I actually rewatched one of the streams. And man, the quality, not to like compliment my own stream, but for some reason, like it comes out really clear on this camera lens for whatever reason. Marty Lewis says, thank you everybody. I was 4 times vaccinated and was very careful. This was the first time ever. Well, Marty Lewis, please get well soon. Please, please. We need Marty Lewis healthy, or else how else are we gonna walk nearly 13 miles or 10 miles a night if we don't have Marty Lewis here to help us out? Sally is here, says, hey Chris, good to see you, Sally. Chris Beeman, always a pleasure. Hope you're well, Chris. Humane says, nice clear night. Yeah, it's definitely a beautiful night out here in New York. You know, today was a really nice day too around Manhattan. It wasn't too hot, it wasn't too humid. It was really, really nice day. It was a busy day, really busy day for me. I was uptown, I was downtown, I was back uptown. Had a lot of meetings. So I'll just give you guys a little bit of an insight. As we've been talking about inflation, as we've been talking about the CPI numbers and the PPI numbers, which came out today, which was a horrible print, by the way. But to be fair, if we look at the core PPI, which is excluding energy prices and food or volatile energy, it actually moderated a little bit. But then again, we do have very prominent figures on Wall Street that are coming out here saying to everybody that we need a 75 basis point rate hike or a 100 basis point rate hike. So it's definitely has been a little bit of a crazy day, that's for sure. Nakos is 10 miles tonight. We may do 10 miles tonight because we have to go all the way down downtown and then back uptown. So we're gonna go to the Brooklyn Bridge essentially. Randy the Machines is an analyst on Bloomberg, said today was expecting only 25 basis points. What do you think the markets will do if she is right? I don't know, I think that's a good question. I don't think she's gonna be right. But then again, never say never. Because I think the last time I looked at the futures market, they were pricing in a 90% chance of a 75 basis point rate hike. So I don't think we'll get 25. If we do get 25 basis point rate hike, I think the markets will melt down pretty severely. You know, Bill Ackman actually came out today and tweeted to all of his followers and at the Federal Reserve, saying that in order for the market to restore faith in the Fed, we need at least 75 basis points, at least. Then he actually came out maybe about an hour later, I'd say 45 minutes to an hour later, calling for a 100 basis point rate hike, saying that would be the best case scenario. So if we have back-to-back 100 basis point rate hikes, essentially his thought process is, if we can just rip the Band-Aid off really fast, yeah, maybe it'll cause some market volatility, asset prices may go down temporarily, but then we sort of get all the damage out of the way. But here's what I was having this conversation with one of my buddies today. You know, let's just think back to the days of Alan Greenspan or Paul Volcker or, you know, any of the Fed chairs before Jerome Powell. This is why it's different this time. And I know what you're thinking. Tom, you never say that on Wall Street. You never say it's different this time, because those are the famous last words. And I think you're right. But this is what is different this time. There was a lot more room to work with back in the day. So right now, we are essentially at a level where interest rates are pretty much zero. Pretty much. I know not literally, but pretty much. Inflation is ramping. And we have a huge equity market sell-off. So there's really not much the Fed is essentially stuck between a rock and a hard place. There's really not much they can do. It's either you just raise interest rates to kill inflation. And if you do that, I think that is acting in the best interest of the vast majority of Americans. But if you want to be a hero and try to come in here and sort of play like the Bank of Japan and how they're doing things with quantitative easing to try to save asset prices, inflation, you're going to have CPI prints double digits. You're going to have a 10% to 12%, maybe even 15% CPI if you cut interest rates just to try to save the stock market. And I don't think that's going to happen. I think that's extremely unlikely. I think the Fed chair, Jerome Powell, is going to do the right thing by raising interest rates. But back in the day, like when my parents were buying a house, like 14%, you know, just a couple months ago, you were paying 3%. Now that we're having a crazy sell-off in the bond market, I believe a 30-year fixed as of today was 6.32% after it just rocketed past 5% on Monday. So we'll break it down a little bit more, but I want to know what you guys think. Hey, Joan is here. Good to see you, Joan. Good evening and happy Tuesday. Millie says, thank you for showing the beauty of New York City. My aunt lives near East 88th Street, and I was just there for a visit 2 weeks ago. Beautiful location there on the Upper East Side. You know, it's a shame we never really get to stream on the Upper East Side as much as I'd like. So maybe one of these days we'll have to take a walk up to the Upper East. But tonight, there's no time to waste. We have to head down to the Brooklyn Bridge. But on the way, we are going to be passing the Federal Reserve. I think it's very fitting for tonight's stream to pass the Federal Reserve. We will be checking out the New York Stock Exchange, the Fearless Girl, and we will walk over to Broadway and check out the Muddy Bull. Might as well. Wow, Chris Beam is like it's only 101 degrees in Phoenix, Arizona today. Chris, I mean, I give you a lot of credit. There's one thing about Arizona and Nevada, I just can't deal with the dry heat. I mean, I could deal with the humidity, I just can't deal with the dry heat. Hey, James Brumley says, think the gas prices will go down. I don't think anytime soon, but if I was looking at a lot of charts of like copper and other precious metals, and they all look to be in severe topping patterns. So here's the thing about commodities. Commodities tend to have these insane boom bust cycles, like really crazy boom and bust cycles. And I think in terms of gas prices, well, if we look at what are crude futures trading at right now? So if you look at, you know, maybe ticker symbol CL, what is it at? Like 124 maybe? The problem is, and we've been talking about this, I think maybe 4 or 5 streams ago, what is the breaking point where the average American calls it quits. And here's what I mean about calling it quits. My speculation, and this is pure speculation by the way, my speculation is that the system breaks when the average gas price matches the federal minimum wage. So right now, I think the average cost of a gallon of gas across the United States, this is the average, is a little over $5, I think. When that average meets or exceeds the federal minimum wage, which right now I believe is $7.25, that's when I think the system will break. Not to be too overzealous, but what I mean by that is Americans will start having to make a decision to just stay home. Because if the average gas price for a gallon of gas is $7.25, that means here in New York, you're gonna be paying 10 bucks. That means in California, you're gonna be paying maybe $12 to $13 a gallon. And at that point, the average American making a minimum wage or maybe even a little bit more than a minimum wage, it's just not gonna be able to work in their budget. And the reason why I say that is because 2 weeks ago, I believe, we got the consumer credit data out of the Federal Reserve. And with that report, Fed Chair Jerome Powell and his friends at the Fed essentially said that US household debt hit an all-time record high, including credit card debt and the like. So if the average price for a gallon of gas now is $5 and household debt is at an all-time record high, any sizable increase in gas prices, I think it's like you call it a wrap. And obviously then, hold on, I just want to make sure. There's always these blind spots here, as you can see. It doesn't look too bad on camera, but I'm extending the gimbal out here. It's kind of dangerous. You have to watch when you're crossing the street. But essentially what my thesis is, there's gonna come some point where you can only put so much on the credit cards, where people are like, okay, so I could afford to put gas in my tank to drive to work because I could afford to make the minimum payment. But let's not forget what's happening simultaneously here. What's happening simultaneously is the Fed is raising interest rates. And what happens when the Fed raises interest rates? Your minimum payments on your car it doesn't happen, but I think tomorrow will be a very telling day. I think the Fed's going to do the right thing, and you know, the market may respond positively, rather positively, because the number one place we need to look for, or that we need to look at, is not the stock market. We should not be looking at the stock market. We should be looking at the debt market, right? What is that 10-year treasury yield doing? What is that 2-year doing? Right, watch the yield curve, and the debt market will foreshadow or forecast the stock market. Hey, Herbert is here. Says Tom, average in California is $6.43. If someone claims it's $10 somewhere, that's a rare one-off and not the norm. Always enjoy your streams, Herbert. Hey, Herbert, thank you so much for the $5 donation. Appreciate it very, very much. Yeah, so Herbert, you're spot on, right? So when I say, ooh, I think this guy's gonna try to go. What I'm trying to say is, once the national average gets to 725, or if, this is full speculation, if the national average gets to 725, in those high cost places like California will probably be at $11. New York will probably be somewhere like 9 or 10, right? So you're 100% right. And also, Herbert, to your point, you know, they'll always run these news stories. If you guys notice, they'll go to like the one-off gas station that's like in the middle of LA, and they'll say, oh, it's $10 gas, and then like try to posterize and plaster it all over the place like that's everywhere, which is obviously not the case. That's, you know, probably a little bit of, you know, laying it on thick, as I like to call it. So you do make a good point, but gas prices are elevated nonetheless. Hey, British Gray is here, the one and only. British Gray is joining us from Tampa, Florida. Hopefully you're having a good Tuesday. We're walking down Broadway. This is West 29th. And hopefully we will get to our destination in about an hour and 10 minutes. Depends on the pace of my walking. I'm going to try to speed it up as fast as possible, but we'll get it done. Hey, RJ is here. Good to see you. Sunshine is here. Welcome, RJ and Sunshine. Sunshine after rain, welcome. Ruby Falcone, Revis, good to see you. Wow, Herbert says I help train service dogs. Love that, dude. Wow, look at this. You know, I always like listening to classical music. Hey, Frank is here. What's up, Frank? Says also hello from Austin, Texas. Hey, Frank, I was just in Austin, Texas 2 weeks ago. Frank says, Tom, do you think that we're in for another 20 to 30% drop in the S&P? I don't know. I think it's possible, but I think we're starting to get the sentiment really, really bearish. So, Frank, I don't know if you just joined, but I was walking down Park Avenue today, and I literally stopped in my tracks. So at a newsstand, there was a New York Post, right? New York Post. On the front page of the New York Post today, they were talking. I can't really grab the paper out of my bag now. Maybe in an hour when we stop, I'll show you guys. But I grabbed the New York Post off the stand, and on the front page of the Post, they were talking about the stock market crash, economy crashing, and it was a big picture of the New York Stock Exchange with a big bear attacking Uncle Sam. And there was only one other time in history, and I'm from New York, there was only one other time in history where I saw the New York Post talk about the stock market, and that was in 2020, literally the day that the market bottomed. So I'm not saying that the market's gonna bottom based off of a New York Post article. What I'm trying to say is usually when Main Street, the Main Street media outlets, the non-financial media outlets are starting to talk about the economy and the stock market and how bad things are, that's usually a signal we're closer to the bottom than we are closer to the top of the market. So here's where I think the market will probably go over time. I think the S&P will tag the 200-week moving average, which I think is about 10% lower from here. But then again, nobody really knows. But I'll tell you what I did do, just off of like sort of a principle thing. Today in my IRA, which is like a retirement account, in which case you don't access that stuff till you're 70 years old. Oh wow, this looks like a brand new place over here. I actually did buy the market today. So I have it on like autopilot, right, for my retirement account. So I usually have, and let me know if the screen is too dark tonight, everybody. I'm putting my brightness down so my battery doesn't die, but just let me know if the brightness is good for you guys. I did buy a little bit of the S&P 500. I just bought the market today, based upon just sentiment, really only, and based upon the forward PEs. The forward PE ratio of the S&P 500 is at historically low levels, but that really doesn't mean anything because earnings estimates can still be revised down, and I totally understand that and I totally get that. But my bet is that when I retire at 70 years old, I just turned 27 a couple days ago, I believe that corporate profits in America will be much higher than they are when I'm 70 than they are today. So usually the second to last Monday of every month is when it just automatically buys the market in my retirement accounts. But I just bought a little bit extra today, just for fun, because I saw that New York Post article and I thought it was rather funny, because I saw the same exact headline during the height of COVID. I remember the exact same scenario. So I'm like, maybe this is a signal that we're getting closer to a bottom than not. But in your actively managed account, right? So let's say if you're watching the channel and you're running money for a fund or something like that, or clients, which many of you do, many of you email me. Obviously, it's always best to wait for a follow-through day. So in my actively managed account, I have about 87, almost 90% cash now. You know, when I wrote the Behind the Street newsletter last week, I think my cash levels were about 75%. Or about 75%, because I did risk a little bit of equity in my long-short portfolio from the follow-through day we had 2 weeks ago. But in which case I got stopped out of those positions. There was really not a lot of merchandise to buy at the time, which case I got stopped out. So the cash levels then go up in your actively managed account. Because if you have to talk to a P&L every year, you cannot ride stocks down 80%. That's not risk management. That's bizarre. Okay, if you talk to any of the investing greats, Stanley Druckenmiller, Paul Tudor Jones, you cannot ride stocks down 80 or 90%, like many money managers that rose to fame over this crazy bull market, like Cathie Wood and the like. I think she's a very smart person. I respect her a lot. I actually met her at the 2022 Bitcoin conference. She was extremely nice, extremely smart, extremely sharp, but no risk management. I mean, there's no excuse to ride something down 80% and lose 80% of equity on a stock. You got to manage your risk there. So here we are near Madison Square Park. Beautiful night. Hey, Matthias is here. Says, good night, Tom. Good to see you, my friend. Joan is here. Hey, Out and About, welcome. So Out and About is joining us from Canada, Toronto. She is our great moderator. Always a pleasure to see you out and about. Mark Francis 076. This is work life. Heck, retire at 50. Do not work longer than 50. You have to enjoy the world. Yeah, I mean, I get that, but I really enjoy what I do. I really enjoy what I do. Hey, Cosmo, what's up? Cosmo Scary is here. Good to see you, my friend. Hopefully you're doing well. Hopefully your week is going fantastic. NE says, I personally just hate holding cash because I feel like I'm always just trying to time the market. I'm also a VT. The chat's moving too fast. I've got to remember to put on slow-mo. I'm also a VT and chill with Bitcoin investor, says NE. Yeah, so I think there's two ways to go about it, right? And this is just we're just hanging out after work. I think you have to learn it a little bit, how to manage risk a little bit. And the reason why I say that, it goes back to sort of what Peter Lynch says in his books, which are fantastic books, by the way. I would definitely recommend reading One Up on Wall Street, probably one of the greatest investing books of all time. And Peter Lynch used to be in charge of running the very, very successful Fidelity Magellan Fund back in the day, which was one of the most successful mutual funds on Wall Street of all time. And what Peter Lynch says is something very thought-provoking and interesting if you really think about it. And it's a very common sense type thing, but it makes sense. You will never beat the market if you only invest in the market. Which means if you just dollar cost average into an S&P 500 index fund, you will just match the performance of the market, and you'll still probably get extremely wealthy. You'll get really rich, which is great. I do that. Just for full transparency, I do that. So in my retirement accounts, in my IRA, ever since I was a teenager, the second to last Monday of the month, just automatically buys the S&P 500. Doesn't matter if the market's up, down, sideways, I don't care. I don't even look at it. I don't even notice it half the time. But that's called passive investing. And I think, in my opinion, it is important if we want to maintain, whoa, look at this. Beautiful view of the Empire State Building. I mean, my God, could you ask for a better view? I mean, really? This is probably 9.3. 9.3 out of 10. What do you guys think in the chat? So I think it's very important, if you want to maintain a stable and functioning market, to have active investors. And as you move up into the institutional level, which maybe hopefully one day I will, you can actually acquire large stakes in companies, in which case you can influence management's decisions if management isn't doing the right thing to maximize profits and maximize value for shareholders. You can actually act as an activist investor to acquire a majority stake in a company, in which case you can actually have influence and try to improve the operations of a business and things like that. So that's why I think active investing does serve its place. Generate alpha, but it is true that the fact is the vast majority of people and the vast majority of money managers on Wall Street do not outperform the S&P 500. And I think our good friend Jack Bogle, or John Bogle, he's actually the CEO and founder of the Vanguard Group. He unfortunately passed away, I believe, 2 years ago. But he was really the first person to really uncover, I don't really want to say, let's put it this way, uncover the egregious fees of the mutual fund industry. So way back in the day, if you wanted to buy any mutual fund, you'd probably have to pay a 5% front-end load fee when you buy, a 2% management fee every year, and if you ever wanted to sell, you're probably also going to have to pay a 5% back-end load fee. So Wall Street was really cleaning up shop on the retail investors, charging them egregious fees. So Jack Bogle, John Bogle, owner of the Vanguard Group, God rest his soul, unfortunately passed away. He came up with the idea of an index fund to have extremely low cost, extremely low expense ratio, less than a fraction of 1%, to have Americans buy the broader general indice, which is the S&P 500 or the NASDAQ or the Dow Jones Industrial Average, as a way to match the performance of the general market. And I think that's probably the best, I guess you could call it invention, or the thing to help the average guy or girl trying to build wealth over time. I'm a big fan of index funds, but if you ever want to try to be above average, I think you have to try to do at least some active investing. But you don't have to. But I choose to do that. So I have two separate accounts. One is just a retirement account. It's all indexed. Rarely ever look at it, but I do manage money. Hey, Samantha R says, I'm really loving the Empire State Building tonight. Hey, does anybody know why the Empire State Building is lit up in this color? It almost looks like the New York Mets color. It almost looks like it's for the New York Mets. Yeah, what's up, pal?
May I ask a question?
Yeah. King says, hey, Tom, really enjoying your expertise and business knowledge. Thank you. Thank you, King. Yeah, sometimes people come up to me and ask me things, but I don't know, in the current climate of where New York is at, if you seem a little bit off, I'm just gonna keep walking. Marcelo Gills is happy to be back here, Tom. Let's enjoy the live stream together. Hey, Marcelo, good to see you. So Marcelo, speaking of UBS, analysts at UBS are coming out and predicting a 50 basis point rate hike, I believe. So I believe UBS, Credit Suisse are predicting 50 basis point rate hike, but Goldman Sachs and JP Morgan, I think they are the main two investment banks. And I think BNP Paribas as well are predicting 75 basis point. Oh yeah, it's Flag Day. I forgot. Happy Flag Day, everybody. I completely forgot about that. Happy Flag. Sunshine after rain says, wow, beautiful. Yeah, the Empire State Building is looking phenomenal tonight, everybody. Robert, yeah. Hey, Zay Batatas is true New Yorker, way of dealing with it. Good to see you. Nako says Tom. NMB 045 says Tom, why can't OPEC increase supply to help gas prices? I mean, in theory they could, but look at the geopolitical climate. I'm not sure why if they would really want to cooperate with that. Van says, do you play Wordle? I do not play Wordle, but I've been asked that on multiple occasions if I do. Maybe I'll look into it actually, because this is the seventh time somebody asked me that. EP says, one of my portfolios are going to take a hit. This is EP. Well, hopefully not too bad. Hey, King says it's lit for the 4th of July. Is that true? Young SC Loving says, you are very knowledgeable, my brother. I enjoy your videos. Keep up the great work. Hey, thank you for the kind words. I really do appreciate it. And thank you for coming along with me after work. I appreciate it very much. T. Campbell says, just do 150 basis points and get it over with. Hey, I mean, I think, so T. Campbell, I think you're in the same camp or the same boat as Bill Ackman. So Bill Ackman is the founder of Pershing Square. And Bill Ackman, obviously very famous for making about $1 billion buying swaps on the S&P 500 right before the massive COVID crash. Then he is also equally famous for losing big on Netflix. But I'm actually a big fan of Bill Ackman. I think he's a good guy. He's a very, very controversial character. Maybe I shouldn't say character, but a very, very controversial gentleman on Wall Street. Many people like him. Some people don't. I think he's a very smart and he's a good guy, and I've learned a lot from him. But today he came out actually on Twitter. So if you guys want to read his tweets, if you follow me at Walks Wall Street, I retweeted what he said. And he claims that the Federal Reserve has totally lost control and has totally lost credibility. And the only way for the Fed, according to Bill Ackman, to regain credibility would be to raise interest rates by 75 basis points tomorrow and in the next Fed meeting, and to provide additional clarity. Then, about 45 minutes to an hour later, he tweets again, following up on his previous tweets, saying that he said it would be better for a 100 basis point rate hike back to back to get it over with. So you could think about just ripping the Band-Aid off just to get it over with. I think it's very highly unlikely that we're going to see a 100 basis point rate hike. I think we're going to get the 75 basis point rate hike. If you look at the futures market, it's pricing in a 90% certainty we get that 75 basis point rate hike. But here's the main thing that's concerning me, and I sort of talked about this on last night's stream. And I feel like I'm almost hammering you guys with this ad nauseum, but we should not be looking at the stock market here. I know everybody wants to say, oh, look at the Dow, look at the S&P 500, look at the NASDAQ. You got to be watching the debt markets here, because when you have an uncontrolled, so I think this was the first newsletter I ever put out, the first Behind the Street newsletter I ever put out, was my thesis on when everything is going to come to an end. And that is when we have an uncontrolled sell-off in the debt market. So if we know that bond yields have an inverse correlation to price, when bonds get dumped, yields spike through the roof. And yields this week have been on a rocket ride. I mean, they have been going to Mars. Look at the yield on the 2-year Treasury. Look at the yield on the 10-year. Look at the yield on the 30-year. You're seeing that yield curve compress, get flat, and even invert, which is not a good sign at all. And that's why I think we've been seeing extreme pressure on stocks, is because we've been having this huge deleveraging in the bond market. But it'll be interesting to see what happens tomorrow. Kirby is here, says, will the airlines lock in oil prices or wait it out? What do you mean by that, Kirby? Could you just clarify that really quick? Hey everybody, we have EBITDA. What's up? EBITDA, good to see you. Says, hey Tom, long time no see. Sure has been a crazy past few weeks. Hope all is well. Hey, thank you, EBITDA. Hope you are well too. It's good to see you. Hopefully you are holding up over there at Bank of America. Always good to see you in the chat. Thank you for joining. Jamie is here, says, haven't they stopped hedging their oil costs because they were so bad at it? Yeah, so you know what that reminds me of? That reminds me of Ray Dalio's book Principles, where in the very beginning of Principles, I'm not sure if anybody's read it, he talks about when he was tasked with trading futures for McDonald's. So you never really think about that kind of stuff when you think about McDonald's or any of these other grocery chains, or QSR, which is like quick service restaurant. You know, there was also another really cool story that I want to bring up to you guys, and I think it's just unbelievable. But I totally forget the name of the person, but I saved it on my YouTube watch page. And later tonight, I'm going to go in the Discord and post the interview. But essentially, it is this unknown or unnamed farmer that lives in the Midwest. And he always holds every year this commodities conference that only like a select group of like 300 people go to. And supposedly he has one of the most successful newsletters ever. And it's so funny because if you read this newsletter, every single word is like misspelled. There's typos all over the place. But this guy is like a true American farmer, like rough, tough guy around the edges. But he's worth like $500 million from trading corn futures. And the story is so incredible. I have to give you guys the link to this podcast because you just got to see it. And I think his newsletter is like $50,000 a year. But the world's best commodities traders subscribe to this newsletter. It's just an unbelievable story. It's so cool when I heard about it. So I will post it in the Discord. But I believe the podcast was called How I Made My First Million. And it's hosted by the guy who sold The Hustle. I'm not sure if anybody's familiar with The Hustle. But he's a really cool guy, really interesting entrepreneur. So I really enjoyed that podcast. So I'll make sure to give it to you guys, I promise. Cosmos says, Tom, will you ever charge for the newsletter? No, I will not. T. Campbell says, hey Tom, any thoughts on the new New York City budget? Yeah, so I think we passed the $1.1 billion budget, didn't we? I didn't have enough time to read it, to be quite honest, but I saw a lot of stuff about affordable housing in there. Did anybody who is a New Yorker here read the budget? I saw it briefly. I think it's like $101 billion, isn't it? All right, so we are at Union Square, everybody. Hey, Lisa's here. Good to see you, Lisa King. Good to see you, King. Matthias says, any advice on someone trying to break into investment banking? I think that would be a question for EBITDA. So I don't work in investment banking, but many of my friends do. But we actually have an investment banker in the chat, EBITDA. But I'll give you my advice, but if EBITDA is still watching, that's definitely your guy. And I think EBITDA's dad actually used to work with Steven Schwartzman, which is really cool. So I think that's what's awesome about the stream, is because we have so many people from all different walks of life that are willing to help each other out. But the number one thing I do is you gotta network. So if you're in college right now, if you have a LinkedIn, I would be messaging investment banking analysts, associates, ask them to go out for coffee, pick their brain, try to be of value to them, be interested in the market overall. If I was a teenager again, I would spend my weekends just reading the Wall Street Journal, Barron's, Investors Business Daily. Just familiarize yourself with the markets in general. I think it also depends on which department of the investment bank you want to work in, right? Do you want to be in sales and trading? I remember when I was young, I wanted to do S&T, which is sales and trading. But that sort of department within the investment bank is unfortunately in structural decline due to obvious reasons, algorithmic trading, things like that. Or do you want to be an M&A investment banker, mergers and acquisitions? I think it just depends on which department you want to be on or want to be in. But I think the best thing you can do is just educate yourself about finance in general, the market. So when you go on those interviews and maybe you get a summer analyst program at Goldman Sachs and you're at your rotation, if you know what's going on in the market, if you know about interest rates, if you know how to build discounted cash flow models and things like that, you're going to stand out and they're going to hire you. But that's sort of my advice. But I'm not an investment banker. I work in enterprise tech sales. So check out EBITDA's comment. His comment is going to be way more valuable than mine. Marcelo says, Tom, considering U.S. markets nowadays, is investing in small caps more profitable than blue chip companies? What's your opinion? Well, my thought process on that, and again, I don't know, but here's my thought process. So I think it's important to explain a thesis. So here's my thought process on that. Let's just talk about the Russell 2000 in general. Usually, companies within the Russell 2000 tend to not be that profitable. Usually larger cap companies like solid blue chips tend to stand up better in a recessionary environment when we have inflation ramping. And I think this was newsletter issue number 13. So I wrote about it in the Behind the Street newsletter issue number 13 about zombie companies. So a lot of companies within the Russell 2000 are what you call zombies, in which case literally the only way that they stay in operation are due to artificially low interest rates, because these companies can borrow at extremely low rates to pay their employees, to pay their rent and things like that. So I think you're starting to see that come to a head right now. And as we've been covering on the streams and in the Behind the Street newsletter, look what's happening to a lot of those very frothy companies, very high beta, very high growth, like Peloton. Headline news, layoffs. They're laying off 30% of their workforce. Today just came out that Coinbase is laying off, I think, 10% of their workforce. So it's usually the companies that do not have any earnings, that generate little to no free cash, are the companies that are gonna, whack half their workforce first. So if we think about the environment we're in, which is an environment of rising interest rates, those companies that do not have earnings or their earnings are forecasted in the future, those are the companies that are gonna get crushed. And I think we saw those dominoes already fall, right? The number one stocks to sell off in this market going back almost 9 months now were the SPACs, the special purpose acquisition companies with no earnings. Then you had the very high beta growth tech, the software as a service. Many of those SaaS companies are actually very good, profitable companies, but their PEs have expanded so crazily because interest rates were so low. But as interest rates go up, if you think about it, if a software as a service company is forecasted to earn $10 a share 5 years from now, and interest rates are at 0, well, that PE is going to expand, or your multiple is going to expand. But what happens when the reverse happens? What happens when interest rates go up? That means their future earnings are now worth less in today's dollars, right? As interest rates rise, their future projected earnings are now worth less. And that's why you see rotations into more like staple companies, like your Coca-Colas, your oil and gas companies, right? The only sector in the S&P right now that I think has posted a very, very good, very, very good return and generated significant alpha are the oil and gas companies, because they are printing money right now. They're paying dividends and they have earnings right now. So a lot of these smaller caps, a lot of the high beta growth are the ones that are going to get sold. And I think much of the selling in those names are done. Like you look at Zoom, right, which is probably one of the only really, I would say, high multiple companies that have come down and they're actually profitable. It's actually trying to make a higher low. I really wouldn't buy these companies, but I don't know, that's my sort of opinion on it. But then again, I could be wrong. But what do you think? What do you think? So check out all these cool bars here. We're actually headed close to NYU. So we're gonna take a quick lap around Washington Square Park, and then we'll make our way down to Wall Street, where we will walk past the Federal Reserve and check out the New York Stock Exchange. Yeah, Emmanuel says, hey Tom, it looks like you're headed down to Wall Street. We are. So we're gonna head down to Wall Street tonight. T. Campbell says, Tom, Coinbase is actually laying off 18%. Oh my God. Yeah, it's insane. But I think you guys get the point. But look, I'm always optimistic for the future, but we are at the top of the hour. So that means if you like what we're talking about, everybody, on tonight's stream, if you scan the QR code, every other Tuesday after the market closes, I will send everybody a free investing newsletter where we talk about not only the US equity market, we talk about emerging markets, fixed income, we'll talk about housing. So it's a great way for everybody to stay connected, and it is completely free. And thank you to the, I think, almost 1,200 people now that are signed up to read the Behind the Street newsletter. Really appreciate it. I enjoy writing it for all of you. And if you ever have any recommendations about topics we should explore or write about, let me know. Send me an email at walkswallstreet@gmail.com. But please scan the QR code, punch in your email, and every other Tuesday you will receive a free, pretty much all my equity research I'll give away to you guys for free. But now on to the more important thing, which is the walk around New York City. So now let me read some of the comments. I know I've been rambling on a lot tonight. James says, I wonder how the pawn shops are doing with the downturn. You know, that would actually be a really interesting piece of data to understand. And I think the reason for that is because the University of Michigan Consumer Sentiment Index that came out last week was so horrible, was so egregious. It came in at the lowest reading ever, even worse than the financial crisis. So when consumers are unhappy, they tend to not spend as much money. But we're not seeing that just yet. So I actually would like to see something like that. Hey, Leah's here. Good to see you. This is, what's up, Tom? Good to see you. Welcome. Roy S. Good Tuesday to you, Roy S. Who Dat Dave says, my daughter went to King's College there by Wall Street. Hey, very good college down there. So I always used to pass King College because I would get off the 2 train. Or sometimes, you know what it was, Who Dat Dave? When I got off at Rector Street on the 1 train, I would pass King's College and walk down Wall Street. That is when I worked right next to the Deutsche Bank. This was probably 5 years ago now. I can't believe it was that long ago. But yeah, King's College is right there. You're right. Great school, by the way. Great school. Hopefully she's doing well there. Simpson says, New York City is the city where they have the Macy's parades. Yeah, you're right. You are right, my friend. Hey, Dusty Cole says, new here, Tom. Cool show and discussion. Hey Dusty, welcome to the show, my friend. Welcome to New York. EBITDA, this is Tom. My 2 trades from back in January have literally been holding my portfolio up. XLE and SQQQ, 3 times levered inverse QQQ. You know, I do remember you saying that, talking about that in the chat. That on top of using collars for my longs. How's your portfolio looking? So I am now maybe low 90s in cash. I have been testing the waters with about 1% equity, maybe 2% equity on each follow through day, in which case I've been stopped at. So I'm probably like negative, my P&L for the year is like negative 12%, which is not too bad. I mean, considering the NASDAQ is down 30%, but the way that I manage my actively managed portfolio is I'm a true disciple of Can Slim investing, which is essentially Bill O'Neill's, he created Investors Business Daily. So it really only works in markets where growth stocks and innovative tech and innovative companies are really in gear. So I had a great last 8 years when, you know, stocks like Atlassian were rocking, when stocks like Nvidia and AMD, companies that are exponentially growing their earnings and their sales, those tend to do really, really well. But the thing about those stocks is their earnings are growing so fast, their revenues are growing so fast, they have great return on equity, fantastic pre-tax and after-tax margins, that the market assigns ridiculous multiples to these names. So they could be trading at a ridiculous price to earnings, price to sales ratio. So at the time of their peak, they could be trading at like a 300 or a 350 PE, right? So it's very hard to get in those names towards the end of the cycle. But when you have a follow-through day in the market and it really starts to ramp, you get in on those stocks on the ground floor. You hold for 6 or 7 earnings reports that are beat and raise quarters. You're going to double your account. I mean, in Atlassian, I bought my house on Atlassian, but not having a good year this year, not at all. But what can you do? That's the market. I'd rather be down 12% than be down 80% or 90% like a lot of these meme stockers and buy the dippers are. But that's fantastic, EBITDA. Good for you, my friend. EBITDA is like XLE is like 70%. Yeah, so the thing about that, EBITDA, I was like, I really didn't want to size in a lot of the energy memes because that's just really not my, hold on, I'm just gonna try to cross the street here. That's really not my expertise. As you guys know, what I do for a living is enterprise tech sales. So I know every single software platform out there. I know what companies are using. I know which cybersecurity solutions they're buying because I sell these products. So I tend to sort of stay in my lane. I'm not an oil guy. I'm not a commodity guy. So I feel like if I ever tried to venture in that, I'd totally blunder the trade. I'd probably blow up my account. But I don't know. But congratulations on that, EBITDA. It's fantastic. But that was like the only, it's so funny. That is like the only long trade that has worked for the past 12 months is going long the XLE and the XLF. Like the only one. And that is the only one I didn't participate in. As hilarious as that is. But we are here at Washington Square Park, one of my favorite places in the city. Beautiful tonight. We may do one lap around the park and then head down, just because we've never been here in a long time. Yeah, EBITDA is almost 75% of XLE is Exxon and Chevron. They are both in ESG and have more cash than most companies. Exactly what you want to hold right now. Yeah, you're 100% right, EBITDA. You're 1,000% right. But again, for me, I'm just not a commodities guy. I feel like I'd totally blunder that trade because I feel like the moment I go long oil, gas is going to be $2 a gallon again, and I'm going to get blown out. It's one of my good friends who runs a hedge fund in a similar trading style to me, Slim trading style. He's like, we were talking about this, and he's like, never style drift. He's like, a lot of big name money managers where they style drift to, maybe they change the fund strategy from growth to value. So they specialize in value, or maybe they then change from US equities to emerging markets. That year that they do that they style drift, they tend to either blow up or almost go out of business. So I'm like, I would rather just sit in cash in my long short and maybe eat 2 or 3 years where I'm getting chopped up down 12%. And maybe that's not the right thing to do, but that is what I'm doing. Wow, everybody, look at how many people are in Washington Square Park tonight, and this is a Tuesday night. Crazy. Well, it's good to see people outside. Dusty says never style drift. Read your personal style either, or should you? Yeah, it's funny. John Hale is here. Welcome, John. Brian Forrest is here. Says hello. The one and only Bagels and Walks. Good to see you, Bagels and Walks. Faircho says hello, Tom from Ecuador. Always watching your channel. Well, please come to visit United States. We'd love to have you here. EBITDA says SQQQs are 120% for me. I just knew that the growthy NASDAQ stocks would get killed, so I went 3x leverage, and it's been amazing so far. I'm going to sell being up 120%, 6 figures. Just watch. Yeah, so EBITDA, I want your thoughts on this. So in the last newsletter that I sent out, I said, this was last week, I said, I think we're probably going to get at least one more large leg down in the market, and it seems like we're getting that right now. Because if you look at the put to call ratio, it screams total complacency. And if you look at the VIX, yeah, the VIX is elevated, right? It may be at 32. But look where the VIX was in 2008. Look where the VIX was in 2018, right? Remember where the VIX was in 2018 when the market bottomed on Christmas Eve? Also, look where the VIX was in 2020 when the market bottomed with the whole COVID-19 pandemic. The VIX went to Mars, went to 80. So I don't think this market will bottom unless we have a blow up in the VIX. Number one, I want to see at least a minimum of 60, and I need to see the put to call ratio go to 3. But until then, I'll just be sitting in cash, or mostly cash. Hey, Leah Zivitatis is Washington Square Park is getting back to the 80s and 90s. This is the good side. Yeah, I love Washington Square Park. It's fantastic. NMB 045 says I was at Washington Square Park the previous Saturday. Lots of interesting personalities. Yeah, I mean, NMB 045. Definitely a little bit of everything here. You have college students. Not all I used to do. After work, I would come here, skate around, hang out. Jonathan France's Biden speech says we're doing great. Well, I mean, he has to say that, right? I mean, do you think this guy is going to come on and say, oh, the United States economy is doing horrible? I mean, he has to say that. He has to blow the smoke. Same with really any politician. So here's the One World Trade Center, looking absolutely beautiful. So I don't want to walk around this park too long, everybody, because we do have to pass by the Federal Reserve. We'll knock on the door. We'll see if Jerome Powell is home. And we'll encourage him to raise rates 75 basis points if we can. But check out this view. Beautiful view. But if you guys are enjoying tonight's stream, feel free to leave a like on the video and subscribe if you are new. We go live every single day, well, 5 days a week, 8:30 p.m. Eastern Standard Time, between New York City and Miami, and we talk about finance and we talk about really anything. Western Mass Daves has got to keep the morale high, I guess. I mean, that's his job, right? I mean, even though the economy's not doing well and the bond market is imploding, it's not like he's going to get up there and it's like, yep, everybody, the bond market's imploding, we're going into a credit crisis, and the stock market is going to continue to fall off a cliff. I mean, he can't say that, obviously. Hey, David Randall's here. What's up, man? Always good to see you. Yes, Samantha R says 9-1 view. I agree with that. All right, this is like a 9-3 view because if you look closely, you can see the Empire State Building under the arc here. Tom AK says talk about the Stanley Cup. I think I would embarrass myself if I ever talked about the Stanley Cup. I know nothing about hockey. I'd be in total embarrassment. Kirby says, oh my God, just saw Action Kid. Not here, so he lives by me in Miami. So I think it's highly unlikely that he's in New York. Hey, Solo401, what's up? Solo, we're about to see your favorite building here in a minute. One World Trade Center. It's lit up beautiful. We'll have to drop a solo in the chat. Exclamation point. Solo. Hey, Johnny TV says, hey, good evening, Tom. How are you? I'm doing good. It was a busy day today. I was downtown, uptown, all around. But now I'm with you guys, and that's all that matters. We're having a good time. So we're exiting Washington Square Park. We're gonna head down to Wall Street. We're gonna check out the Stock Exchange, the Fearless Girl. We'll go over to Broadway and check out the Mighty Bull. Yeah, EBITDA says walks from Wall Street. Tom, I honestly wouldn't be surprised if Jerome Powell was in the Fed right now, was in the Federal Reserve right now. I would love to be a fly on the wall in his office. I would too. Well, maybe he's in the stream, just under like a pseudonym. You never know. Jerome Powell is more than welcome here. Sunshine after rain says great night, Tom. It is. And the city is definitely alive tonight, which is good. It's a good thing to see that. You know, I mean, for those of you who are watching the streams during the pandemic, this place was a ghost town, so it's awesome to see people coming back and having a good time. Marcelo says, Tom, will the dollar return to a strengthening path? Oh, the dollar is on an absolute tear. So that we were talking about this yesterday a little bit. So the Dixie, so think about it like this, and here's what's concerning me on a global macro view. Here's my concern. Very good coffee shop across the street, by the way, Irving Farm, New York. One of my favorites. I thought that was a little bit more important than the global macro view here. But what's concerning me, if we look at a macro picture, I know we like to sort of zone in on the United States, but the United States is sort of like the least worst place right now. And here's what I mean. I'll sort of explain the position before the chat goes crazy. This place is also very, very good. Tipsy Shanghai. Fantastic place. Good ramen. Oh no, this is Tipsy Shanghai. I don't know what that place was. I've never been here. I've been to the other place. I just don't know what it's called. But if you look at the dollar strength, I think we're at 106. So if you want to go to tradingview.com or CNBC or whatever, look at the dollar strength right now. So if you type in DXY or Dixie, I think we're about at 105, 106. Look at all the other currencies around the world falling off a cliff, especially the Japanese yen. Now, why is that? Why do we think that is? Why do we think that the Japanese yen would be getting its face ripped off right now? Well, I have an idea, because we talk about the Federal Reserve all the time, but global central banks, so the European Central Bank and all the others, and the Bank of Japan, everybody's doing the same thing except Japan. Everybody is in a tightening cycle. Everybody is raising interest rates. Everybody is doing quantitative tightening. But Japan is way out of left field, and they're still easing. They're doing quantitative easing. They're printing money like crazy, and they have negative interest rates. And I think the market is fed up. So it's very possible, I think, that Japan could be the first major world currency where the people totally lose faith in that established world currency, in my view. Now, that's not to alarm anybody, but put up a US dollar Japanese yen currency pair, totally falling off a cliff. Now, here is, let's not walk down this way. Not getting a good vibe down there. I like the street better. Here's what I'm trying to get at. Think about what the country has been through the past, let's say, 3 to 4 years. We've printed trillions of dollars. We've literally given people money via stimulus checks, handed it out like confetti, and the world is still choosing the US dollar over their native currency. So what does that tell you? So that tells me that it's sort of like the United States is the less, like, out of all the, if you had to line up like 20 objects and you said which is like the least non-attractive, you would say, okay, I'll just go with the United States, just because that is where the safety is, and the safety that you're getting is 8.6% CPI, so 8.6% inflation, 10.3% PPI, and a declining stock market. So it's interesting. The global macro view is very interesting, and that's why I think of the American, when we talk about American exceptionalism, I think it's pretty real. I think it's pretty real. Iris's US dollars are getting less than before. Well, I think the Dixie's at 106. So I think we are breaking out over the 2017, 2016 highs on the Dixie. So the relative strength. So when I talk, let me clarify that. When I talk about dollar strength, I'm talking about it on a relative basis. Obviously, the US dollar's lost 90% of its purchasing power. But when we're talking about it on a relative basis, comparing it to other currencies around the world, the US dollar is really, really strong. And that's just a fact. The Dixie's, could anybody tell me where it's at? Now I'm very curious. But Iris, good to see you. Welcome. Solo 401, good to see you, my friend. Palmettis, welcome. Ali's, US is the only true global superpower, and the US dollar holds very strong value. Yeah, I mean, I don't know about exactly that, but I agree. Sean Ellis says it's 105. Okay, 105, got it. Yeah, so if you zoom out for a minute, if anybody has tradingview.com, it's a free charting software, pull up the Dixie and zoom out on a monthly time frame. It's a screaming breakout over the 2016 highs. And if you notice by looking at the chart, hopefully we don't get hit by a car when we cross. If you notice by looking at the chart, the next stop is the 2002 highs at like 120. And the global macro environment is setting us up to go there. And that's actually very stock market negative, by the way. A strong dollar is very, very negative for stocks. But we'll see what happens. Hey, Dusty, good to see you. Hey, Miss Brown Eyes is here. Good to see you, Miss Brown Eyes. Somebody says, can you show Goldman Sachs building? We may have time to go there. I believe 200 West Street, I believe, is where the Goldman offices are. 200 West. But Matthias, good to see you. Miss Brown Eyes, thank you for joining tonight. Hey, Smee Media says thank you for the stream. Well, thank you for being here, Smee Media. It's always a pleasure. David says Peter Schiff is right. So let's talk about Peter Schiff for a minute if you guys want to. I mean, only if you want to. EBITDA says, Tom, what do you think the low will be for the S&P? So here's what I think, EBITDA. I actually think we're closer to bottoming than not, but you know my golden rule is you gotta wait for a follow-through day. You gotta, I mean, this market could go extremely a lot lower, and that's why I've always said ignore these buy the dip people, ignore these meme stock people. They're gonna get blown out. They're gonna lose all their money, and that's how the markets work. But if I had to throw a dart at the wall, I would say we'll probably bottom at the 200-week moving average, which is about 10% lower from here. Because if we look at the forward PE of the S&P 500, I think right now we're at like 16. And you guys could fact check me in the chat, please, because it's so hard to remember all this stuff. But I think right now, a forward PE in the S&P right now is at 16 or 18. Anywhere from 16 to 18, which is really historically low levels. But let's take the other side of that argument for a second. So let's say if you were extremely bullish on the market, and you said, oh, I'm bullish on the market because the S&P 500 forward PE is 16, I'm gonna buy it. But the contrarian case to that would be, well, earnings revisions could go a lot lower. There's no guarantee that those earnings will hold. You know, you could have Microsoft, Amazon, Alphabet come out and revise their earnings lower, and then that PE multiple goes down. It's possible. Hey, Kevin Sunderland, what's up, dude? Long time no see. I hope you are well. Says, hey, Tom, I know the economic hurricane is coming, but Vegas operating 95% capacity, flights are full, people are spending. So Kevin, I think that is I think that's the comment of the night. Thank you for your generous donation. You are a stud. Thank you for being so kind. I always appreciate you being here. So to piggyback off of what Kevin said, I'm seeing the same thing. So I just had to do a huge road show. I was in Austin, Texas, back to New York, in Miami, Philadelphia, then back to New York. And then I have to go back to Austin, Texas soon, by the way. Hopefully we'll get a chance to stream. But the flights are so packed, the airports are so ridiculously packed that even though I have Clear, I'm not sure if you guys know what Clear is. It's like $100 a year. I think I get it free through one of my credit cards. Even with Clear, it took me 35 minutes to get through airport security. Clear is like a TSA pre-check type deal, I think. But you're totally right. And so Kevin, another thing is, a couple months ago, this was the very beginning of earnings season. Obviously, all of the major financial banks in the financial sector kicks off earnings season. Almost every single big CEO or big bank CEO, they said credit card spending and debit card spending is up, but they're seeing consumers reappropriate or reallocate their spending habits. So to your point, during COVID, you saw spending on Netflix subscriptions, eating in, ordering things and products and services off of Amazon. But now to Kevin's point, and this backs up Kevin's point because Jamie Dimon said the same thing, the CEO of Goldman Sachs said the same thing, not Goldman Sachs, CEO of Citigroup said the same thing, that consumers are just reallocating what they're spending on. So as opposed to spending on Amazon packages, now they're spending on experiences. They're flying now because they've been locked down for 2 years. They want to go out and they want to travel. They're spending on hotels. They're spending on music venues, concerts. And I think I see that walking around Houston, Texas. I mean, not Houston, Austin, Miami, and New York. Everybody is just reappropriating where they're spending. So I'm not sure how long this could go on, because according to the Fed, we just heard from them 2 weeks ago, consumer debt is at an all-time high, which means balances of people's credit cards are at an all-time high. And as rates go up, those minimum payments are going to go up. So it's a good observation. You know, there's a very notable money manager, Ross Gerber. He said he has the same exact thesis that you have, Kevin, and he says that if you look around California, that's where he's from, he's like, the consumers are spending. You know, if you look at a lot of these earnings reports, even though Target came out, Walmart came out and said that their margins are going to compress and their inventories are building up, they're still saying that consumers are spending. They're just spending on different things. But that is my only concern when we want to talk about deflation here for a second. I think Target, Walmart, a lot of the big box retailers are going to have to either write off a lot of this backlogged inventory or slash prices like crazy in order to move a lot of this inventory. But then again, that could just be a crazy supply chain issue caused by COVID. But all good points. Rock says, Tom, there's a labor shortage in the airline industry now. Yeah, so there's a labor shortage, to your point, Rock, of skilled labor, which are like the mechanics, the home builders, things like that. So all of my flights have been crazy, by the way. Every time I've flown in the year 2022, my flight was either delayed, canceled, the landing gear was broken, or we ran out of fuel literally mid-flight and we had to land in another airport to refuel to get to our next destination. It was wild. It's been just wild travel. I'm not sure if anybody else has been experiencing the same thing, if you guys have been traveling a lot, but it has been a dog and pony show for sure, traveling. Yeah, Bagels and Walks is like, it's a gorgeous night. I agree. I really like this outdoor dining setup here. Rox says, Tom, many canceled flights over the last holiday due to crew trouble. Tiggins says, Tom, do you think Tesla is overvalued? I wouldn't buy Tesla here. I wouldn't buy anything here. You wait for a follow-through day. I mean, this stuff could get creamed. Wow, Humane says, I got stuck in DFW for 7 hours. Whoosh. Hey, Victoria's back. What's up? Says, hello, beautiful people from Australia. Welcome. Iris Lou is our good pal. Says, hey, Tom, today gasoline prices average $5.93 a gallon. Wow. Insanity. NMB045 says, the problem though, Tom, is that you fly New York City, Miami a lot. Those routes have very high volume. You know what, that's actually a good point. I didn't think about that. High volume flights equals more problems all the time. That's true. Yeah, New York City, Miami is an extremely, extremely high volume flight path. You were right. Nako says, Tom, air travel, I don't miss it, to be honest. It's not too bad. From Russia with Love is here. Says, what about Peter Schiff? All right, we'll talk about Peter Schiff for a little bit. We might as well. We're a little bit all over the place tonight, but these are my favorite streams when we're a little bit all over the place. Let me just check my battery. I may have to turn down the brightness because I want to make sure we're good. Okay, we're 50%. We're rocking and rolling. We're ready to go. So Peter Schiff, for anybody in the chat who doesn't know, you could probably call him Dr. Doom 2. I know he's not necessarily the original Dr. Doom, but he is a gloom and doom guy, but I do respect him. I think he's very smart. I also think his son is extremely brilliant as well. Gregory's here, what's up? Peter Schiff is one of those people that you can sort of describe. Oh, this guy. Peter Schiff is one of those guys that you could sort of describe that a broken clock is right twice a day. So he's really been calling for an economic meltdown ever since the lows of 2008. But I like Peter Schiff, and I'll tell you why. Because Peter Schiff does not abide by Keynesian economics. Now, I don't want to get into a big debate about, you know, is Keynesian economics bad or good, or that's not the point I'm trying to make. But Peter Schiff is very pro-markets, free market capitalism, end the Fed, no government intervention. And last podcast of the Peter Schiff show, I would highly recommend it. I listen to Peter Schiff because he's very educational. He may not make money, right? If you look at all of the Europac funds, they're actually negative over 12 years. I don't even know how it's possible, but it's true. But Peter Schiff is so brilliant and so smart. He just doesn't know how to manage money in an environment of artificially low interest rates. His way of managing money works when you don't have Federal Reserve intervention and artificially low levels of interest rates and crazy monetary policy. His investing style works when you actually have responsible people running the Federal Reserve and the country, which is almost never happens. So check out the Peter Schiff show. It's his podcast. It's fantastic. And it was so funny because I was listening to his podcast and he said the same exact thing that we have been talking about on this channel for a very, very long time. Remember back 6 months ago, and even all throughout the streams, I said, guys, these SPACs, when they blow up, these things are going, some of the companies are going to go out of business. Okay, these special purpose acquisition companies, stay away from these companies. I think the SPAC boom of 2020 was a way for Wall Street to pillage and just rake in a bunch of fees, because these SPACs are a way to bring companies public in a way where there's less regulation and less transparency than original IPO. So you could take a company public multiple ways, but when you do a traditional IPO, there's more rules and regulations. When you do a SPAC or a special purpose acquisition company, you sort of avoid a lot of those extra rules and regulations, and you can make extreme amounts of fees and things like that. So the topic of the Peter Schiff podcast was, there was this one SPAC. I mean, there was so many, it was ridiculous. But we had our first SPAC file for Chapter 11 bankruptcy yesterday. And I'm like, I knew it. I'm like, it's just a matter of time. And this is going to be the first of many, by the way. I forget the name of the company, but it was some EV company, like Advanced EV Solutions or something. It was obviously a fraud company, obviously, but it filed for Chapter 11 bankruptcy. I think it went public at $12. I think that was the SPAC price. And now I think it's trading at like 3 cents, and then they filed for Chapter 11. And Peter Schiff gives a really, really good breakdown, probably breaks it down a little bit better than I do, about just why this SPAC mania happened in the first place, and why you're seeing a lot of these big investment banks start to pull out of a lot of their existing SPAC deals, or their special purpose acquisition deals, because the SEC, or Gary Gensler at the SEC, is now looking at all this craziness that has gone on. And this is going to play out just the way it played out in 2008, where the SEC is very reactionary. So they'll wait till investors lose all their money, and then they'll just over-regulate at the end. So it's going to be the same exact thing like 2008. So what Gary Gensler at the SEC is proposing now is that if these special purpose acquisition companies, if it turns out that they were giving overzealous or over-optimistic financial projections or earnings projections, and these companies go out of business, the investment bank could be held liable for litigation. The moment Gary Gensler said that, across the Bloomberg terminal, Goldman Sachs will no longer be doing any SPACs. JP Morgan Chase will no longer be doing any SPACs. HSBC, and the list goes on, because Wall Street will sell you this garbage to make the fees. But the moment that they have the potential to accept responsibility or any sort of liability, oh, they're out. They just want to make the fees, they want the fee income, they want to slam the investors, and they want to dip. But the moment that the SEC says, okay, wait, these financial projections were obviously fraudulent. I mean, these companies had no pathway to profitability. It was obvious. Anybody with just a economics 101 or finance 101 background could understand that the vast majority of these SPACs, all of the financial data that they were putting out to investors or pitching, it was all BS. And so it's going to be hard to prove that. It's going to be hard to prove if there was malicious intent in that data. A lot of the management and the C-levels of a lot of these companies are just going to say, oh, it was economic headwinds and we couldn't hit our numbers. But I mean, between you and me in the chat, Peter Schiff said this too on his podcast. It was all nonsense, right? And the only way that they were able to do it is because when you do a SPAC, there's a lot less regulatory environment that goes on there. So Peter Schiff, good guy. Europac, Euro Pacific Capital. An interesting fact about Peter Schiff, he is currently in, I think, the largest tax fraud litigation the world has ever seen on his Euro Pacific bank. I'm not too sure how that's going. I may have to check in on that. But guys, check this out. This is the Jenga building. Such a unique building. Very, very unique. As we start to walk further down towards the World Trade Center, I'll give you guys a better view, but very unique building there. Hey, Sunshine, New York City, what's up? Good to see you. Yeah, Scott Ains says Chamath. Yeah, I mean, so I'm not going to really go into Chamath, but I think he... I'll bite my tongue. Dutchman says, Tom, if you received the call from Zuckerberg or Musk to come work for both of them, wait, what'd you say? Dutchman says, Tom, if you received a call from Zuckerberg and Musk to come work for them and both gave you what you wanted for salary, who would you choose? Probably Elon Musk. Probably Elon Musk, just because I don't really have any interest. And I'm not saying anything negative about Zuckerberg. I just really wouldn't want to work for Meta. I don't think I would be productive there, to be honest. I think I would be more productive at Tesla. Hey, Michael Chin, what's up? Says Elon Musk is cutting 10% of his workforce. You're right, he is. So Elon Musk came out saying that he has a funny feeling about the economy, and he cut 10% of his workforce. But we've been seeing literally every company coming out and saying this, by the way, too. Coinbase just cut 18% of their workforce. I originally thought it was 10%, but somebody in the chat said 18%, so we'll go with 18. Wow, but check that out, everybody. If you guys are enjoying the stream tonight, feel free to leave a like on the video and subscribe to the channel if you are new. We do these live streams about 5 days a week at 8:30 Eastern Standard Time. Hey, Kerry is here. Says, hey, Tom, good to see you. Just Barry, welcome, my friend. Line Sync. Jeff says, I work at Meta, first job out of college, though, so I couldn't really be picky. Well, Jeff, Meta is a fantastic company to work at. I'm just saying, for me personally, like, everybody's different. I just don't think I would be productive at Meta. I just don't. But if you have a job there, dude, that's a fantastic company. You should be proud of yourself. That's fantastic. Mick Nelson says, you mean I can't make $250K for writing code for 1 hour a month? Yeah, you can. You definitely can. Daniel G says, good night, Tom. Off to bed. See you tomorrow. Daniel G is joining us from Buenos Aires, Argentina. Thank you for joining tonight's stream, Daniel, and we will see you next time. Always appreciate your presence in the chat. Mario is here. Says, is it possible to find a studio apartment under $2,000 a month in a safe area in New York, preferably with a 40-minute or less commute to FiDi? Who? When you say New York City, are you talking about you want to live in the city, like Manhattan? If it's Manhattan, no. No. But you could probably get a studio on the Upper West Side of Manhattan for like $2,200, I think. And if you can get a studio on the Upper West Side of Manhattan for $2,200, it's worth it. I would say do the deal. Because at the end of the day, what you're gonna wind up doing is spending a little bit under $2,000 in Brooklyn, and it's gonna be like a shifty neighborhood, and you're gonna be living really, really far out. So the Upper West Side is one of my favorite neighborhoods in New York City. It's beautiful. You're right near Central Park, the Museum of Natural History, all the trains are there. So I would spend the extra, check out that roach right here. So I would spend the extra $300 a month, go to the Upper West Side, have a good time, and just commute to FiDi. Because you also have to think about opportunity cost. So do you want to save like $300 and live in probably not a really good neighborhood of Brooklyn, or like an okay neighborhood of Brooklyn, and live around people that, you know, may not have the same interests as you? Or do you want to live around people that are that do have the same interests as you? Or maybe you're living around your coworkers, living in Manhattan, meeting people. I think that trade-off is worth it. But that's just me. If it were me, that's what I would do. But I don't think you're gonna find anything under 2,000 in Manhattan. Sunshine, New York City, what's up? Yeah, that thing was big, man. Hey, Victoria says, love Central Park. I do too. Chambers Street. So this is Chambers Street and Church Street. We are getting towards my old stomping grounds as we approach Fulton Street in a minute. Somebody says, please do a Central Park stream. We may do that tomorrow. Tomorrow we'll probably start streaming from Park Avenue, the Seagram building. Hey, Brad's brain is here. Says, how's everybody doing tonight? We're doing good. We just had a good conversation about the Fed. You were talking about Peter Schiff. It's been a good time. Carrie says, Tom, rent is out of control in the Bay Area. Yeah, I mean, the rent is out of control here too. You know, the rent is out of control also in Miami. You know, I think we could just sum it up and say rent is out of control everywhere. I think that's probably a better description. Rent is out of control everywhere, man. Like, for real, it's nuts. Hey, Captain Super says, Tom, I worked in the World Trade Center Tower 1 for about a week in 1997 and about a month in 1998. Well, Captain Super, that's an experience you'll never forget. And I'm so glad that you got that experience, because those were beautiful buildings, man. And that's amazing that you were able to have that experience. Seriously, it's fantastic. My uncle spent many months here at Ground Zero. He was in Local 14, which is the Union of Operating Engineers, doing all the cleanup. He actually slept in his crane for weeks, helping clear the debris down here. So that's awesome that you got the opportunity to work there. So speaking of the World Trade Center, it's looking beautiful and strong tonight. Dutchman says, I just received a $170 a month increase in rent. Wow. On an 800 square foot, 1 bedroom in Phoenix, Arizona. Well, actually, Dutchman, I don't know. I may sound a little bit ignorant when I say this, but that doesn't sound too bad, actually. But maybe that's just because I'm thinking in New York terms. But some of my friends in New York have been receiving ridiculous rent increases. So $100, I mean, less than $200 rent increase. I mean, maybe just take that, man. Maybe that's not too bad. I mean, I have friends that their rent went up $500, $600 in the city. Michael Chan says, Tom, Peter Schiff has always been bearish. Yeah, you're right. He's always a pessimist, Peter Schiff. And I don't really subscribe to that type of mentality, pessimism. But, you know, again, the old saying is a broken clock is right twice a day. And I think this is the time of the day for Peter Schiff. But he's a great economist. I mean, he knows true fundamental free market capitalism. He understands the crony capitalism that we have in the United States via the Federal Reserve, via corporate socialism. So he understands. I think his podcast is phenomenal. I would subscribe to it. Dusty says, eternal optimist here as well, but realist as well. Yeah, I always tend to lean optimistic on everything, especially when it comes to your personal life, what you can control, right? So you can't control the prices of stocks. You can't control the prices of housing, but what you can control is your own career path and your own trajectory of success. Do you show up to work every day and you give it 110%? That's in your control. It doesn't matter if the NASDAQ is down 1,000 points. You could still show up to work every day and give it everything you got. And if you do that over long periods of time, you're gonna see results for yourself. So in that sense, I'm always optimistic. You always have to be optimistic about that. But I think this is probably the greatest view of the World Trade Center we have. Check it out, everybody. Beautiful view. Hey, Miami walking and driving tours, what's up? Good to see you here, my friend. I'll be back in Miami soon, by the way. Palmetti says, my rent would make you gargle Listerine. I believe it. Michael Chin says, you're right. Believe and invest in yourself. Agreed, Michael. Dusty Cole says, exactly. Roy S is the Oculus building. So Roy, maybe we'll take a walk through the Oculus building. Gregory's like 10,000 out of 10. So here we are, World Trade Center. All right, let's do a quick battery check. We got 38% battery. We're ready to rock and roll. We're gonna do one quick lap around here. I'll show you guys the beautiful structure that is the One World Trade Center. We may be able to take a walk over to Goldman Sachs, but I don't think I'll do that tonight because I want to make sure we get to see the Fearless Girl and the Mighty Bull, the New York Stock Exchange, and we're going to pay a visit to our friend Jerome Powell to try to convince him to raise interest rates 75 basis points tomorrow. But check this out, beautiful building. Hey, Billy says, Tom, I pay $1,800 for a 1-bedroom apartment, blocks from the beach in San Diego. That sounds like a pretty good deal. 1,800 bucks right near the beach in San Diego. I'll take that. I'll take that all day. You know, I've never been to San Diego, so maybe I'll have to pay a visit. So I think this hotel is called the Millennium, to our left. But this is the Oculus here, and I believe it's supposed to represent a dove, a dove's wings. I think the ABX girl told us that before. Hey, Pedro B says hello from the Dominican Republic. Hey, Pedro, what's up, dude? Good to see you. Love the Dominican Republic. Enjoy your walks and conversations very much. Thank you so much for the compliment. You know, I used to do a lot of work in East New York, Brooklyn, where I would do some consulting with a lot of home healthcare agencies, setting up their electronic visit verification software. And they always had amazing Dominican food right around that neighborhood there in East New York. I want to say right off of Gates Avenue, if anybody's familiar with that, but that was the first time I ever had like real traditional Dominican food. It was really good. I actually kind of miss it. We may have to go back there just to try it or have it again. But here we are looking in the Oculus here. So this is sort of like a train station / mall. I believe you can get the PATH train and all like the other trains and things like that. Beautiful building, by the way. You know, I'm not sure what time it is, maybe like 11 o'clock at night. There's actually some people, decent amount of people for 11 o'clock at night. Hey, Dusty says, hey Tom, I'm very familiar with home healthcare. Great service for so many people. Very growing demographic. Yeah. So that is really what I specialize in, right? I sell tech, sell software and hardware into the healthcare sector, mainly specializing in home healthcare. So I do a lot of the electronic medical records setup, electronic visit verification. But here we are at the World Trade Center. Seema says, I love the artwork on the wall. Yeah, it's very unique, right? So right behind here is actually BMCC, or Borough Manhattan Community College. Hey, Jasmine says, I really love your channel. It makes me fall in love with New York City all over again. Thank you for saying that. I appreciate it. So I think, yeah, so the memorial, the 9/11 memorial is closed. So I don't think we're allowed over here. It's all roped off. But I'll give you guys another shot of the World Trade Center and then we'll head out. But everything is all roped off, so I can't show you the actual, the memorial. Hey, Carrie says, wow, I work at UCSF. I'm sure you're familiar with Epic. Yeah, 100%. Wow, Kerry, maybe we could do some networking, man. I'm trying to, maybe I'll send you an email. But yeah, I've heard of Epic 100%, for sure. So one of the solutions that we were trying to provide in the home healthcare space, this was back in 2019. So the solution that we created is, so we saw a lot of vulnerabilities in the market. So in home healthcare, there's a multifaceted issue here. So number one is extreme employee turnover, employee churn. Okay, so it's a huge cost for the business. So if we can try to find creative solutions and understand why home healthcare aides or HHAs are quitting their job in droves, then we could work backwards and try to solve those problems. So here's sort of what we found through essentially just asking. I would literally walk up to home health aides in Brooklyn, in the Bronx, at a lot of these agencies, and just ask them, what's wrong? Why don't you like your job? What are your concerns? And what we found is that C-suite or C-level executives at home healthcare agencies weren't asking these questions. So if you don't ask your employees why they're unhappy, you're never going to know, and you're never going to really truly solve that employee churn problem. So here's what we found. The number one reason, at least for the New York City metropolitan area, the number one reason why home health aides were quitting their job was not for the reason you'd expect. And the reason you would expect is probably the pay, right? They make minimum wage, anywhere between $15 to $20 an hour. It's not the reason why they were churning. Here's the reason. In New York specifically, at a single home healthcare agency, you can have your employee populace speak up to 30 different languages. That is not an exaggeration, up to 30 different languages. So that creates a language barrier within your organization. Number two, they are forced to clock in and out via electronic visit verification. So if you look at the demographic of a home health aide at a home health care agency, they tend to be first-generation immigrants. They have trouble using technology or their own technology. They tend to have unreliable smartphones or tablets in order to perform their clocking in and clocking out capabilities, accepting patient cases, and uploading electronic medical data to where it's HIPAA compliant. The problem was the agency was saying, oh great, you're signed up to work at Ultimate Care, you're signed up to work at Human Care. Here, take your personal phone and download all of this software, provision it in your own language, and do it yourself. That's not a way to run a business. Your job as a C-level executive is to make it extremely easy for your employees to do their job. So as a consultant, you try to find efficiencies. So what we've done is we said, okay, look, you have to make sure, let's say 20% of your workforce only speaks Spanish. You have to provide them with a device that is fully staged kit in Spanish. You automatically download that software for them on that device in the native language that they speak. You put the instructions in the 1-800 help number in the appropriate language that they speak. And you administer it all via an MDM or mobile device management software. So you can automatically update these devices in the field so your employees don't have to take on the burden of being an IT guy, and they can do their job. And in relation to that, they can have a better patient experience. So ever since we've implemented that, employee retention has shot up drastically at these agencies, because when you provide your employees the tools they need to do their job, they're going to get paid on time, they're not going to get frustrated fumbling around with the device, and they could actually focus on doing their job, which is caring for the patient. And now you're in compliance with HIPAA laws, you're in compliance with EVV laws, but from an operational standpoint, these agencies were just hiring thousands and thousands of people and just saying, yep, my employees are quitting just because that's it, and we can't do anything to fix it. But if you think like that, you're never really going to get a true success to operationalize the efficiencies of your business. But when you ask your employees what the problem is, funny enough, you're going to find out what the problem is. So this is Zuccotti Park. So speaking of Peter Schiff, check this out. If you watch, or if you go on YouTube, which you guys are on YouTube right now, you have permission to click off the stream, type in Peter Schiff, I Am the 1%. Phenomenal series that was actually put out and produced by Reason TV. So Reason TV, during the Occupy Wall Street protests, right after the 2008-2007 financial crisis, they were covering the Occupy Wall Street protests right here. And Reason TV put out a special called Peter Schiff, I Am the 1%. And essentially, it was just like an educational interview with Peter Schiff to help people understand that capitalism was not the reason for the financial crisis. The reason for the financial crisis was central banking, artificially low interest rates, and crony capitalism, or corporate socialism. So fantastic, fantastic interview with Peter Schiff from Reason TV right here. So check it out. Michael Chan says, I always made sure to help the AIDS. It's a tough job. Yeah, it's a crazy tough job. So these home health aides do God's work. And when they sign up to be a home health aide, the organization is like, yeah, you have to download all this software yourself. We're not going to tell you how to do it. And the aides don't know how to do it because they're older people. They're first generation immigrants to the United States. They speak multiple different languages. So if you can hire somebody that speaks Russian, right, your job as an employer is to give that aide the tools he or she needs to do their job in the appropriate language that they understand, and then you're not going to have any issues, right? But if you just throw everything on the employee, they're going to be really upset and really miserable. So I agree 100%. Dusty Cole says, Tom, I have a caregiver and aide. They are the best. Yeah, I agree, they are the best. All right, we are almost to our final destination here. This is Trinity Church, right at the end of Wall Street. So we are about to be at the one and only New York Stock Exchange. But for now, this is Trinity Church. Mike C says, it's so rare to find a company where the IT department gets it. Dude, 100%, man. Because I think, and the reason for that is I always follow this principle, and I always tell you guys this principle of follow the money and incentivization structures. The IT department at an organization is not incentivized to increase the operational efficiencies of the business. They're incentivized to reduce the workload that they have. So whenever you talk about adding new IT infrastructure to an existing IT stack, the number one person that is going to object to that verdict is going to be the IT department, which is the exact department that you need the most buy-in from. So if you can develop a frame, so in sales, your job is to overcome those objections by reframing and repositioning their objections against them, to explain to them in a calm manner why these solutions will actually make their jobs easier. But you're right. So here we have it, everybody. This is the stock exchange. And very little trading goes on here. It's pretty much just like a TV studio now, ever since we now have algorithmic trading. Most of the market making goes through like a Citadel Securities, a 2 Sigma, the quants, if you will. So there is still some trade settlement on the floor of the New York Stock Exchange, but nothing really to the volume that it was before. Still a beautiful, iconic staple of free markets and opportunity. But it's pretty much just like a TV studio, but I still love it. But here's the real tragedy right here. This is Federal Hall, and unfortunately this scaffolding will be here for 10 years. So I'm not sure if you guys remember, but we were actually lucky enough to get the last stream in, I think it was this time last year, right before they put up the scaffolding here at Federal Hall. This is Nassau Street. So it's going to be 10 more years until the face of Federal Hall is completely clean without any scaffolding. And we'll be sure to stream it from 10 years from now. Please God, if we're still around. But here we are, the front of the one and only New York Stock Exchange. Hey, Ernest is here. Says, what's up, everybody? Good to see you, Ernest. Roy says, any buffering in this area? Perhaps. I hope not. Cynthia Beal says, Tom, I would love to find a 5-eye apartment. Yeah, Sunshine, New York City. We did take screenshots that night. Isn't that crazy, though? So this scaffolding is going to be here for 10 years. But this is the very iconic George Washington statue right here, right outside of Federal Hall. Yeah, Mike C says 10 years, and that's insane. It's true. Unlimited stimulus is Steel Powell's money printer. Well, we're gonna head there right now after we check out the Fearless Girl, but Humane says, why is it there? So I think the New York City Buildings Department found some structural issues with the building. So it definitely is for good reason. Rock says, why 10 years? Is it a scam job? I mean, maybe. But supposedly they have to have really, really special engineers come here because the building is so old. But supposedly it has really, really bad structural problems. But here is the main entrance to the New York Stock Exchange. And unfortunately tonight we will not have time to check out the Fearless Girl, but we will come back and do that another night. Just kidding. I only said that because I know Ruby Falcone is super excited to see it. I just had to tease her a little bit. Hey, Ernest is enjoying the awesome view. Good to see you. You know, I think during Christmas time, the Christmas tree that's here outside of the Stock Exchange may be better than the one outside of Rockefeller Center. Maybe a little bit of a cold take there, but I'm definitely willing. But here we are at the Fearless Girl. You know, and this Fearless Girl statue was actually, well, originally it was placed directly in front of the Mighty Bull on Broadway. But it was so dangerous at the time because it was so popular. So many people wanted to see the Fearless Girl. They actually had to move her to right outside of the New York Stock Exchange. Hey, Kilo Whiskey Juliet, thank you so much for the $10 donation. You are way too kind. This is for the LIRR fair on me. Hey, thank you, man. I appreciate that. I appreciate that very much, Kilo Whiskey Juliet. Very, very kind of you. Oh no, you could walk. We're just streaming, having fun. Did I just say we're just streaming, having fun? Cringe City. But it is beautiful down here, everybody. The unfortunate thing is this scaffolding here. But hopefully in 10 years it'll be down. Rock says, yeah, they wanted the stock exchange backup #1 job after 9/11, ran cables above ground. So I think after 9/11, they moved the majority of that trading infrastructure to New Jersey. So I think the majority of all trades are actually settled across the river here in New Jersey. I'm not sure where, but the majority of all the trades, the settlement is in New Jersey. It's weird, but it is. Because you would think, you know, New York City, the #1 place for finance. So this is the Fearless Girl from the other up at the New York Stock Exchange. Hey, Ruby Falcone, thank you so much for the donation. Really appreciate it. I think it's definitely a cool shot. Yeah, Rick N says, Tom, I think the trades settle at the New Jersey location. I think so too. You know, I'm not too sure. I probably shouldn't have said that. I'm not too sure the reason for that was due to 9/11, but I think it does make sense. But a lot of the settlement is across the way in New Jersey. Pixel Logic says you nailed the shot, Tom. Yeah, we always get that shot every time we come down here. I'm gonna have to go back and look next when I get home, or at least when I'm on the Long Island Railroad. Who Dat Dave says Mahwah, New Jersey. Got it. But Ruby Falcone, thank you so much for the donation. Appreciate it. Oh, somebody says Secaucus. Yeah, I'm not too familiar with New Jersey, like geographically. Scott says yes, after 9/11, the NYSE data center is in Mahwah, New Jersey. Gotcha. Thank you for that. Yeah, it's so weird, right? I mean, if you were just a tourist, you'd think, wow, imagine all the trading activity that goes down right here at the New York Stock Exchange. But it's literally, it serves its purpose as like a historical site and a TV studio. There are floor traders here, but I mean, they really don't do much. The vast majority of trading is all done algorithmically. So we'll do the Federal Reserve and then we'll come back to the Mighty Bull, because we'll end the stream at the Mighty Bull. But we have to check in on Jerome Powell. Cynthia Beal says no Brooklyn Bridge tonight. I do the Brooklyn Bridge, but I think my phone is gonna die. I'm only on, let me check, 25%. So 25% is just enough to go to the Federal Reserve, hope for 75 basis point rate hike, and then come back to the Mighty Bull. Yeah, Marcus Banks, you're 100% right. So Marcus Banks says, Tom, the fearless girl used to be in front of the Mighty Bull. You're right. It's actually 100% true. And I think the reason why they moved her, I remember when it just went in. I remember when the fearless girl just went in, there was so many tourists crowding that intersection of Broadway that I think there was like a couple tourists that unfortunately got hit and killed by cars because it was just so packed and it's such a busy intersection. So they moved her to the front of the stock exchange. I think that was the reason. I definitely remember people getting hit by cars there because there's no cars allowed. After 9/11, because this is a main, you know, terrorist site, unfortunately, you're not even allowed to drive here. So there's all barricades. So you couldn't even drive down here if you wanted to. But if you look straight ahead, this is the Federal Reserve. Straight ahead. This is the entity that causes all of these exacerbated boom and bust cycles. And we are going to hear from the Fed tomorrow. So the FOMC meeting will conclude tomorrow, and we will hear if we will get a 50 basis point rate hike, a 75 basis point rate hike, or if you're Bill Ackman, you're hoping for 100 basis points. Bill Ackman and Jim Cramer came out hoping for 100 basis points as a way to sort of rip the Band-Aid off. Wow, check this out. This thing is pretty cool. So an interesting story I'll tell you guys real quick. I forget the name of the movie because I'm so horrible with movies, but I believe the lead actor in the movie is George Clooney. And I want to say the movie is called Money Monster. It was filmed right here. One of the main sections of the movie was filmed right here. And I remember looking over this balcony and actually seeing George Clooney. He was in one of those bulletproof vests. I think it's called Money Monster, the movie. I'm really horrible with movies, but if you want to Google it, George Clooney, I think, was the lead actor in it. And if you look at the main sort of commercial, I guess they call it, for the movie, was it Money Heist? It may have been, but it's right here. You'll see George Clooney standing right here with a gun in his hand and like a hostage. So it's shot right here. But this is the Federal Reserve, everybody. Here it is. Ah, Dan Russell says, you're right, it is Money Monster. Wow. Yeah, that was a long time ago. I think that was, what, 8 years ago now? But I remember vividly standing right here and seeing George Clooney right here, and all like the camera equipment is going off. Hey, Josie is here, welcome. Michael Chin says 75 basis points would be good. What do I know anyway? I'm just a hair cutter. Dude, Michael Chin, I think you're spot on, dude. I think you hit the nail on the head. Hey, Dow Jones, welcome. DowJones.eth. What's up? We're at the Federal Reserve, Dow Jones. I see Lupe is here as well. Bruce Wayne says, does the Federal Reserve still do tours? You know, I'm not too sure about that, actually. If they do, I'd like to go on one. Hopefully we can get special clearance to stream. That'd never happen, but you never know. Never say never. Lisa says our financial future is in the hands of the powers that be. True. But everybody, it is the top of the hour. If you like the content that we talk about on the stream, feel free to join us at the Behind the Street newsletter. So if you scan the QR code on your screen, every other Tuesday after the market closes, I will send everybody a free financial newsletter covering the US equity markets, emerging markets, fixed income. And this is a good way to keep in touch with each other. So if you want to support the stream in a free way, feel free to scan the QR code, punch in your email, and every other Tuesday, you will be caught up to date with all the necessary market movements. Essentially, this is a way for me to provide my equity research to the chat for free. So please scan the QR code, punch in your email, and we'll see you on the other side. We'll see you behind the street. But now we have to go check out the Mighty Bull. So you know what? We'll take the long way around, because I want to show you guys where I used to work, right next to the Deutsche Bank. And right here is a beautiful view. You get to see the Deutsche Bank, and you're also gonna see, I forget the name of the building, but you'll see it. It's amazing. I'll show you guys. So this building right up top is the Deutsche Bank. This is a major German investment bank. Many people on Wall Street joke that Deutsche Bank is not a big bank. Wow, everybody, do you hear that? I think this water fountain is finally working after many years. I think we've streamed here before, and I used to tell you guys about this. I used to say, when I worked down here, this used to be a big fountain, but they closed it down, and finally it's open again. Captain Super says, I worked at Bankers Trust before Deutsche Bank bought him out. How was your experience there, by the way? Was it good? Hey, Andy is here from South Korea. Good to see you, Andy. I think I see War Walker in the chat too. Good to see you, War Walker. So all the way around here, this actually used to be a JP Morgan Chase branch. So it was really cool when you would go into the bank, you would see this fountain filling up. But obviously, due to COVID, I think it closed down. Sunshine After Rain says, Tom, wounded knee tomorrow. Probably not tomorrow because I have to suit up. I have to dress really nicely tomorrow again, unfortunately. Kwan says, hello, Tom. Cool fountain. They should put a bar down there. Yeah, I think they should. I think that'd be a good idea. But we will be skateboarding this weekend. I can make a guarantee on that. BOT's, Tom, which emerging markets would be a good bet during these times? So I'm going to save that for the next Behind the Street newsletter because that is a great question. And I want to talk specifically about India and China. The Indian stock markets have actually been outperforming the US. And I think something really interesting is going on in China. I'll tell you about it really quick. So as you guys know, I used to have exposure to Chinese markets. Technically, I still do through some ETFs, but I had exposure to Chinese ADRs, which are essentially American depository receipts. In my long-short portfolio, I had exposure to Alibaba, which case I blew the position out last year for tax loss selling. And you guys know my thesis on China. I was an extreme China bull. I've laid that thesis out. But at the end of the day, the geopolitical climate there is almost impossible to do business. But I think the Chinese markets may be bottoming here. Now, I'm not going to stick my neck out and commit money behind that. But I think they actually are. And I'll sort of explain why and type it out. But I've been talking for about 2.5 hours, so I will save that for another stream. So this is the atrium. I used to get off the subway right here, but I would come out here every single day to go to work. Right down here, out the atrium, make a left, 82 Wall Street. This is Deutsche Bank in here. It was a good time working down here. It was fun. So this is way back when I worked for AT&T, and their corporate headquarters down here is 77 Water Street. We were near S&P Global, which has a beautiful view. I have to post some of those photos maybe to the Discord, but the view from 77 Water and the S&P Global building, which is a couple doors down, you can see the Statue of Liberty. You can see both Brooklyn and Manhattan Bridge. It's amazing. But here is one of the best coffee shops in New York City. I think it is called Black Fox Coffee. I used to go here almost every day on my lunch breaks. Fantastic place right across the street from 60 Wall Street, which is the Deutsche Bank, right here. Hey, Mechi A says, hey, from Buenos Aires, Argentina. I arrived late. Good to see you. So we're on 10% battery, but I think we're just going to be able to make the Mighty Bull. So I got to pick up the pace here. But if you guys are enjoying the stream tonight, feel free to hit the like button and subscribe to the channel if you are new. So many of these big office buildings down here have actually been converted to housing. So apartments, condominiums. Because contrary to popular belief, way back in the day, if we want to take it way back, the reason why Wall Street really came about, and a lot of the broker dealers, and oftentimes you could call them bucket shops, If anybody's read the book Reminiscences of a Stock Operator, Jesse Livermore, you know what a bucket shop is, but essentially they used to trade stocks with physical pieces of paper back and forth. So all the broker dealers literally had to be on Wall Street to trade back and forth with each other. Now we don't do that anymore. So a lot of the investment banks, broker dealers, and a lot of the hedge funds on Wall Street have actually moved uptown. I think the only major bank headquarters, like their main headquarters here, is Deutsche Bank. I think Citi is down here. But a lot of them now work on Park Avenue or in Midtown Manhattan or in Times Square. Like you have Morgan Stanley up there. A lot of the hedge funders are on Park Avenue. So a lot of these office buildings, they may appear to be an office building, but they're actually not. They're actually apartments. And very expensive apartments, by the way. So I think one of which is 95 Wall Street. If you guys want to look that up. I think a 1-bedroom in 95 Wall Street, which is right here, it's this one. The only reason why I knew that is one of my offices used to be here. 95 Wall Street, I think a 1-bedroom apartment is like $4,000. Maybe a little bit more. Flat Smacks says, Tom, remember when we used to have to make trades on the phone with our brokers and then check the prices in the newspapers? So I don't remember that personally, but I do definitely know that historically. I really wish I was born during those times and not now. I think that I would thrive in that type of environment. But yeah, insane. You know, remember when you used to call your stockbroker? Really wild how things have changed. Oh, it's good that we came this way because you guys are gonna get a bonus. So as we make a right here, it's the best bagels place in Manhattan, in my view. It's called Leo's Bagels. I used to come here every morning. I know, Delmonico's is for rent, it's a tragedy. But right here is Leo's Bagels. In my opinion, this is the best bagel shop in the city. Right here, Leo's Bagels. So if you're in the area, you gotta check it out. Somebody says like Wolf of Wall Street times. No. So I think that's like a big misconception. Like a lot of people, when they think Wall Street, they think like Jordan Belfort, Wolf of Wall Street. That's like scamming people, right? Essentially what Jordan Belfort did, Wolf of Wall Street, is he would cold call inexperienced investors, oftentimes really old people, and force them to buy pink sheets or penny stocks that he knew were garbage companies. He knew these companies were going to go to zero. He knew these companies... No, this is Delmonico's right here, I think. He knew these companies were going to go to zero. He knew these companies were no good. But he sold these companies to these investors anyway because the commissions were extremely high. But again, that's unethical. And there's a lot more to Wall Street than everybody thinks, oh, Wall Street, the Jordan Belfort movie, you know, you're cold calling people to pitch them on stock ideas. There's a lot more to that. There's LBOs, leveraged buyout deals. You could work in traditional investment banking, in mergers and acquisitions, where you're helping companies sell themselves. You're helping other companies buy other companies. Like, there's a lot more to it than just, that's like a very teeny tiny part. And that was a lot of the unethical activity back then. Yeah, sunshine after rain, the sass, bro. That is what they call me. Hey, Cayenne Pacific says, good night, Tom and everybody. I gotta be up early. Have a great night. Hey, well, thank you for joining. I really appreciate it. I gotta be up really early too. So we will we'll end the stream at the Mighty Bull. And we will be there in a second. as we are passing Broad Street. So I'll give you guys one last look at the New York Stock Exchange. So this is where we were, right outside the New York Stock Exchange, right here. But now we will end at the Mighty Bull, right up here. War Walker says, I want a cinnamon raisin bagel with tons of cream cheese. That's a good order, that's a decent order. So if anybody is not from New York, you visit here, you go to Leo's Bagels, you gotta get a bacon, egg, and cheese on a cinnamon raisin bagel toasted. That is the Walks on Wall Street order. You never know, if enough people go to Leo's and order a bacon, egg, and cheese on a cinnamon raisin bagel toasted, they may name that sandwich the Walks on Wall Street. It's possible, never say never. All right, New York City Film Academy is on the right. Very good film school. Ooh, look at that rat. Did you see him? He went right in here. I almost stepped on him. Huge rat. Okay, Beaver Street and Broadway. Here we are. Ah, beautiful Tesla. All right, here we are, the Mighty Bull. So you guys can sort of see what I'm talking about, right? How the intersection of Broadway goes here, and the Fearless Girl used to be mounted directly in front of the Mighty Bull. So there used to be crowds stretching as far as the eye could see. But here we are at the Mighty Bull. So right outside the Mighty Bull is the New York Film Academy. And after work, I actually used to go to the gym right here. This is Planet Fitness. And this is the Cipriani. There's also another Cipriani on Wall Street. Hey, the Mighty Bull, thank you so much for the donation. So we have the Mighty Bull in the chat, checking out the Mighty Bull tonight. This is a signal of power and strength in the financial markets in these times. Beautiful piece of craftsmanship right here. The Taurus. So if you guys see the Mighty Bull in the chat, check out his Facebook page, our Mighty Bull, our very own. The Mighty Bull says, thank you, Tom. I always feel lucky when I see the bull. Thank you, Mighty Bull.
Get the horns.
Absolutely, yeah. Lion Sing says that's a lot of bull. That's funny.
Video to a photo.
Out and about. We'll see you next time. My phone is on 5% battery, everybody. So we will end it right here at the Bull. We'll be live tomorrow, 8:30 Eastern Standard Time. And we'll be talking about Fed Day tomorrow.
Yeah.
So Dr. Longest, Ryan Royal, XXX, appreciate it. Marcus Banks, thank you. Andy, appreciate it. Lennox says you were on fire tonight with the awesome shots, Tom. Thank you.
Got like 4 photos. All right.
Ruby Falcone, thank you for joining. Andy from Korea, Marcus. Everybody have a great, safe night. And we'll be active in the Discord. So if you want to check us out on the Walks on Wall Street Discord, please look in the links in the description. We will be covering the Federal Reserve FOMC meeting tomorrow, in which case we will hope to get a 75 basis point rate hike. But until then, we will see you all in the next one. Like the video, subscribe if you are new. And to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. And you just need to know where to look. And we'll see you right back here in New York City, 8:30 p.m. Eastern Standard Time. I'll leave you guys off with the QR code for the Behind the Street newsletter if you want to scan the QR code and sign up. It is a free investing newsletter that I send out to everybody every other Tuesday. And I'll see you guys tomorrow. Be safe and be ready, 8:30 Eastern Standard Time from the greatest city in the world, New York. Have a good one.